Hey traders, this is Blake Morrow with Trader Summit, and with me today, I have a guest that I was really excited to have on today because it's been a while since we've talked. We have Mr. Bruce Fraser of Wyckoff Analytix, also contributor at StockCharts.com. Bruce, good to see you.
Blake, always good to get together. It's been too long.
It has been a long time, and I'm so excited to meet you and it was today because, like I said, it's been a long time, but we're at uh, all-time highs. And so the first question that I'm going to have for you, because you follow the patterns of one of my favorite setups, which is a Wyckoff accumulation distribution patterns. My first question to you is, how have those patterns been playing out, and do we have further to go in the markets as a whole?
Well, I came prepared for that question, Blake. It's just I I always know you're going to be tough on me. So yeah, let's see if we can answer those.
Let's do it. All right. Sounds great.
Let me take over the screen. Can you see that?
I can.
Let me get rid of this little thing. Okay. So again, Blake, thank you so much for having me here. I always love it when we get together. Let me just put up these schematics very briefly, and you'll note down here that there's a reference, and this is to a written blog that I have, which is absolutely free to go read at stockcharts.com. I have a Wyckoff blog page there with a number of articles, and so please feel free. Anyway, these are two classic accumulation schematics that go way, way back. I mean, these are very, very old in time, but you can see that nothing has changed in the world of the financial markets. And so we have the accumulation schematics, and you see these little cryptic letters on here. These are actually important junctures on a typical price chart that you'll see, and I'm going to apply them to a market structure that we saw in 2022, 2023. And so I heartily encourage you to go read up on that. There's a special version of this called the reaccumulation structure. Many stocks that are out there that are acting well right now have been in reaccumulations like this and are having that big momentum surge out of there at this time. So again, probably beyond the scope of what we can talk about. The other one, and you can read up on this in this blog post, distribution definitions. And
Yeah.
so these are quite important because markets will prepare themselves for a markdown, a bear run, whether it's intraday, daily, weekly, etc., with a distribution structure. And
Well,
we
and hey,
can,
Bruce, can I
yeah,
can I
yeah,
ask you a
yeah,
question at this point? And
of
this is the
course.
reason why I'm thinking about this out loud, because you have a situation where you're seeing, a handful of stocks that have been taking the averages higher for the most part. That means there's a lot of underperformance in the market, and that's why when if you have a lot of stocks that are underperforming, my assumption is they are, seeing some of these distribution patterns develop inside of this bullish run that we're seeing in the markets. That was my
Yes.
thinking here.
I actually have a slide that I think will actually go to your very good point, Blake.
Okay.
So, and let me just say that what I do and is I actually do these charts where these are like my notes. This is how I keep my Wyckoff notes on these charts over time. And just to go to the idea of a distribution structure, this is this area right over here. And let me even get my little pen working here, and we can look at that, because the thing about here are all the elements we just saw in that schematic through this zone right here, and it just set up this massive, very important big decline into 2022. So this is 22, here's 23, and so on. But what happened next was so important, And literally, we've been marking these slides up as each one of these junctures has been hit. So you can see that there's a very large accumulation structure down here with preliminary support, selling climax, and then this is the preparation phase for a more important advance into a bull run. And it's exactly what we got. At the time that we were doing this, we were saying, and doing point and figure, I'm going to show you one in a minute, that there's a big accumulation structure forming for an important upward stride, upward move, or a markup. And look what we got. And at that time, people thought I was certifiable. And
you might have been.
And so, but here I want to specifically go to what you just said, which is that this zone right here. Now, let me explain what this is. This area, this is the NASDAQ 100 stocks above their 50-day moving average. Okay, so this is a measure of breadth. How strong is the market underneath the surface? And this below here is the NASDAQ composite, which encompasses the thousands of stocks in the NASDAQ. Well, notice what's happened even in the mega cap space of the NASDAQ 100. Look at the decline from over 90% of stocks above their 50-day moving average, now down to in the area of 67. And this is as of Feb 9, so Friday. And then this one here is actually below 50%. More than 50% of stocks, Blake, are currently in the NASDAQ composite are below their 50-day moving average as a measure of whether we're in an uptrend or a downtrend. And so right now you have more than half the NASDAQ composite stocks by that definition in a downtrend. So the market continues to weaken as the stride goes higher. That can happen for a period of time. But what it does tell us is, and this goes right to your point, is that the probabilities of owning a successful stock absolutely diminish if as this line goes down. And so this is a very important thing to keep in mind.
Okay.
And my inclination is to look for three things in these indicators. I look for either oversold, I look for, in this case, oversold, divergence, and then uptrend. And if I get those three conditions, you don't always get divergence, but here's a good one here. So see, higher lows in the stocks above their 50, lower lows in the index itself. This is a classic divergence. And then I look for directionality and I go with it. I just go with it. Now that doesn't mean that, and then here's overbought and downward stride, and the market went down concurrently with that downward stride. Well, that's not happening right now, but that doesn't mean that there aren't many stocks that aren't going down right now. So that's a very important warning.
Well,
and
all right.
That
makes sense to me.
Yeah. So now here's the S&P 500, and the S&P 500 with the same indicator, New York Stock Exchange. You can see the deterioration since right from the end of the year. This thing has been in a downtrend. 58% of stocks above their 50-day right now, down from over 85. But here we have a beautiful accumulation structure. We're rallying up sharply, and look at this trend channel. Trend channel construction is very important in Wyckoff. We're getting pretty darn close to getting to the overbought level of this trend channel. And also this yellow zone is the bear market or the distributional highs, the bull market top of 2021.
So in other words, that has to hold then for the bulls.
Yeah, and we can get a thing, exactly right. And so, Blake, we can get a thing here. I can't get my little pen to go, but anyway, where we can get what's called in Wyckoff an upthrust. And so getting above this high and climbing higher is like an upthrust, and it's coming with deteriorating momentum conditions or deteriorating breadth. And so this is something we need to just be on the alert for. Absolutely trade with the strength, but at the same time, tighten up stocks, be defensive, pare down the stocks that are no longer participating in the uptrend, et cetera.
Yeah,
That's all. That's my guidance.
that makes sense. I mean, it because it's such a strange market that we're witnessing when you have just, so many names that are really not participating in this broad, it's not a broad-based rally. It's just the indexes are being
Yes.
driven by a few names. It would concern me if I was bullish. So this chart that you're showing here is displaying that.
And also, this is the way trends will end, is they will end with deteriorating momentum while the market is scaling higher. There's an old term, Blake, that they use called the generals marching alone. And beware when the generals march alone. And that really is from the old days when the blue chip stocks were General Motors, General Mills, General Electric, General Re, and so on. And when those big blue chips are walking uphill and none of the soldiers are following them higher, that's a big warning. So it's a very old concept.
Yeah, we do have those generals are a whole different group in this generation, right?
Yes, they do. They change. Yeah, they absolutely change, and that's the Mag 7 now. So you're so right there. And so we just need to be really clear about who the leadership is, and it's quite obvious today. And so here, this is actually a chart from 2022, and we were putting this up while the market was in the midst of creating its accumulation structure. And so we were, just as time went on, we were doing this little swing counts, and they were giving really good counts of the highs. Point and figure now is a tool that we use to, because if you use the classical horizontal counting method, it can give you price objectives. And that, I don't know of any other technique that is so good at giving price objectives up and down, both on a small swing trading basis and on a big accumulation distribution basis. And this count, actually, we got right up into this resistance zone from the swing count and then came back down again. And I said at the time, we're going to get up there and then we're going to build a larger count. It's because I just saw this being a big accumulation style structure that was uncompleted. So now let's look at what happened. Now this chart is as of January of 2023. And so the 2023 was just an epically good year. And you can see that this accumulation structure was very nearly complete. Look at the counts I put up at the time, Blake. People were like going, there's no way. The market's not going to, it was at 4,000. And they're like, you're on something, and it's like, this was an interim count, 5075, 5350. And keep that in mind because we'll come back to it. And here's like a bigger count, 6275, 6550. And this is just a substantially higher prices. And the bull market peak came in at 4,800 right here. So now here is another look at this, a little bit more compact data. It's called a 3-box reversal chart with 50-point S&P scaling. And this is actually 2018 to 2020. But look how beautifully this counted up and gave us this count to, this is the bull market peak right here.
Yeah.
And so beautiful distribution structure, and it gave us a good count down to here. But look, counted 5,000 to 4,750, it went to 4,800. So totally a hit. Now look at how beautiful this is. Big, beautiful accumulation with a backup. This is as of November 23. So let's count this. So if we just take the width of this count, and remember the counts that we got from our prior, which was, I think, 6,350, 6,500. This count, using this method, confirms that. Can you imagine that could be in our future?
I mean, so it's hard. It's, given the fact that we're at all-time highs right now, it makes sense, but that is so much further and higher than where we're currently trading. So,
and also, Blake, very good, because point figure can give us objectives, but it can't tell us how long it's going to take.
Right.
So I fully expect, and I'll show you why in a minute, but I fully expect that we're going to pause in here at some point and build more cause in a reaccumulation count to get to higher objectives, if at all. We have to be willing to, let the tape tell us where the market wants to go. Now, this is a count for May of 23. This is what I call swing trading counts. And this is a 1-box reversal, 5-point scaling on the SPY. And look at how beautifully this count here picked up this area and it stopped. Look at the resistance it formed here.
Yeah.
And so it went right into that zone and then built another swing count, a count up to 460. So let's keep that count in mind. And then bring up another count, because this is subsequently what happened. This is what I call a reaccumulation count. And you can see here, I took that count and it counts up to 465, 495. And so this is a rather substantial period of time, May back to November, December, and of 22. So about half a year. And then we had that July to October pullback, and we got a little swing trading distribution. And note, I won't get into this today, but volume works so well on point figure, and to confirm or non-confirm the upward stride of the market. But this is where we were today. I just checked it, Blake.
Yeah, I was going to say, I mean, we're at 502 right now in the spider. So is this we've reached the upper end of the point figure target area. So is that why you think there's some risk at this moment?
Yes, we have the deteriorating breadth, which we looked at.
Yeah.
So 495 is our count. So this line is just under where our count is, which is right along here. We're 1 box above our count. Not unusual to get a throw over in a big momentum move up. And so we have a 1 box throw over. Now, what has to happen, and this goes back to the schematics, is that you get a climax, a buying climax, and then you get a big correction that's unexpected, which is called an automatic reaction. And then you start building a cause. And so that would be the thing that I would need to see here, is to see a big correction, outsized and unexpected, called an automatic reaction. And what that would tell us in Wyckoff terms is that the big, large holders of stock have picked this place to start to raise cash. Yeah. And become defensive. They're taking their profits.
All right. And, well, Bruce, this is really an important chart, but you before we go, you did a little bit of work on a 10-year cycle, and I'd love to have you show our traders what that is.
So here is, let me clean this up. So the decennial pattern is simply taking and averaging out every 0 year of the decade, every 1 year, every 2 year, every 5 year, 8 year, etc., and just taking the average performance of the decennial. I've been using this pattern for 30 years or more, and this is what the typical decennial looks like. The first part of the decade, 0 to 2, it tends to be where you get your bear markets, the worst weakness of the decade. And in fact, that's exactly what we got, with an important low in 2022. And we just looked at the point and figure studies on that. And then you get what looks to me, now what I've done is I've actually put the schematic on here so that you can see that in fact we've had, and this is just the schematic, the Wyckoff schematic, that there appears to be a family resemblance between the accumulation structure of the Wyckoff schematic and what appears to happen in the decennial pattern. So we had an up year in the 3-year. We had a very important low. It came in October of the 2nd year.
Right.
And then we had a very strong 3-year with a sideways to down market in the second half of the 3-year. We got exactly that. Look what happens when we get to the end of the 3-year. We have a big momentum surge. And we're getting that momentum surge. I mean,
Right
clearly,
now.
right now.
Right at this moment in time. Yeah.
Yeah. And so and being an election year, it's, likely not every decennial has an election year in the 4th presidential election, but in an election year, there's going to be all kinds of twists and turns. There could be all kinds of drama in this election year. We can't predict what it is. Who knows? But it seems like it's setting up to be such. That could very well have influence on the trend of the market. And what it shows here is that most of the 4th year is a trading range with a low sometime in the first third of the year, a retest of the highs, wherever these highs are in this momentum surge, a pullback into the 3rd quarter, and then a rally from sort of election time into the end of the year. And I totally believe we could get something like that. And so I'm wondering if sort of the best part of this party that we're in is directly ahead of us. Okay. And that we set up some kind of a reaccumulation. But what I really want to point out is, and of course, we're going to confirm this with actual behavior of the market. And this is a classic reaccumulation. But look at what the 5th year typically looks like. The biggest, strongest, broadest trend of the market in the whole decade typically comes in the 5th year. And so that, to me, is I'm keeping my eye on the prize, because if we do in fact get this in the 4th year, that's all countable from a point and figure perspective. We have a bigger count under here, which I just showed, which is what, 6350 on the S&P. And that very well could be somewhere in the zone of a target that we could hit in the 6th or 7th year.
That to me makes a lot of sense, because if you think about like the political landscape we're in, it's very, you're right. There's going to be a lot of twists and turns, but from my point of view, it does feel like that the general public as a whole in the United States might be a little fed up with the current administration. So whether it is President Trump or another Republican, it seems like somebody more business friendly is going to be in the White House the next 4 years. You would think
that very well reflect how we could get this.
Yeah.
Is that you get a more business friendly climate, and it starts to really be reflected in stock prices. Wow. And so completely understandable, and I'm all for it. I'm all for anything that can put the markets up like this. And so anyway, so I just leave that for food for thought for people. And thank you to Seasonax, who very generously allow me to use their research.
No, that's an awesome chart, Bruce, and I'm so happy that you shared it with us here at Trader Summit. So let me ask you this.
Sure.
I know you can access some of your work on stock charts. You're a contributor over there, but what's the best way for traders to follow what you do?
Roman Bogomazov, my old teaching partner from Golden Gate University, we do a weekly webinar series called the Wyckoff Market Discussion. And this is wyckoffanalytix.com. It's down here on the bottom left, is a great place to get lots of good content, not just from me, but from Roman and the whole team there. And a lot of that content is free. My blogs are available for free at stockcharts.com. And I also do a weekly video series called Power Charting at Stock Charts, where I cover these concepts every week, and that comes out on Fridays.
Well, Bruce, I want to say thank you so much for spending your time here with us on Trader Summit. You're a veteran in the markets. It shows in your work, and you're a true professional. So thank you for spending your time. If you guys and gals enjoyed Bruce's time here, make sure you give him a thumbs up. Subscribe to our channel. It's free to subscribe. Jump down in the comments below. Let us know if you think that S&P could reach 6,000, as Bruce, some of his point and figure charts suggest. I'd love to hear from you, and I know Bruce would too. So Bruce, thank you so much for joining us, and I'll look forward to getting you back on here probably in the next few weeks or so.
Blake, it's always just such a pleasure to get together with you, and thank you for having me.
Our pleasure. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.